Hello friends, today I am going to talk about financial planning and analysis. In short, it is called as FP&A. So under a CFO, there are two departments. One is the accounting, where the record keeping is happening for the business, and on the other side is the financial planning and analysis. What I'm going to cover in this video is I'll be talking about the role and responsibilities of financial planning and analysis team, and I'll be talking about how they are important for the organization. If you are new to this channel, I request you to subscribe to the channel, and if you have not subscribed, please subscribe to the channel. Let's start with the role and responsibilities of the APA team. So financial planning and analysis is responsible for financial planning, analysis and decision making to drive business success. Okay, so this is the core team who will understand the requirement of the business. Okay, and based on that they'll do the financial planning, analysis and also help the management team to take decision so that financially there is no risk for the company. Now let's see what are the key objectives of the APA team. The first one is forecasting and budgeting, developing financial forecast and budget to support business planning and decision making, right? What happens, suppose you are getting salary for 1 lakh rupees. You always do a budgeting for your house, right? How do you spend the rent, yeah, or grocery or on clothes, right? And then you also plan that you should have some amount of saving. Similarly, in the company, in the corporate world, this APA team ensures that we have proper structure, or you can say proper budgets, okay, for each category. How much to pay on salary, how much to pay on rent, how much we should save, how much we should invest on our subsidiaries, right? So all this planning is taken care by the APA team. So they do the forecasting and budgeting. Next, financial modeling and analysis. So building financial models and analysis data to support business decisions. So different type of financial models are there, like buy or make, whether you should buy this product directly or you should make in your factory, right? This is one of the example. Or you whether you need to do a capex investment or you should manage with the revenue expenditure, right? Like shall we take a building on rent or shall we build a building, right? So all these are financial models which the APA team ensures that they take a right decision in favor of the company. Performance measurement and reporting. It's not about budget, it's not about only the financial modeling which they define, but they need to check whether whatever they have defined or whatever budget they have forecasted, whether those are achieved or it has crossed the forecast or it has crossed the budgets, right? So what they do, they develop and do reporting for the KPIs. For each department there will be certain KPIs, right? Like revenue, from the marketing side there is a KPI that this is the target you have. If you don't achieve the target, definitely it will impact all other budgets what you have, right? So the FA team will ensure that they check the budget and actuals and see that whether the business is doing in the right direction or not. Next one is strategic planning and decision making. So whenever the management want to do some strategic planning, for example, the company want to take over a company, or you can say merger case or demerger case, right? In that case, the FA team will do all the analysis to see that whether the decision of merger and demerger is good enough for the company or not. Because it's not happen that you merge it and tomorrow you start suffering and start accruing losses, right? So the FA team will check all the parameters like cash flows or how the business is doing or how is the customer base of the new business. So all type of analysis is done by the APA team, and they help the management in decision making by giving all type of reports like discounted cash flows or what is the net present value of that business and all that, right? Now we'll try to understand how this APA process work. Okay, the person who is working under the APA team, how does his job, or what analysis he does, or what type of decision making he helps to the management team. So let's see. So first step is financial data collection. The first step in APA is collecting financial data from various sources, right? Because once you get the data, only you can do analysis. If you are not able to collect the information on time, then you can't give the result or you can't do the analysis, right? So the first step of the APA team is to collect the data from various sources. Now question is, which are the financial data? The first one is the financial statement. So financial statement includes your balance sheet, income statement, and cash flow statements, and includes your notes to accounts as well. Okay, that is the first document which they should collect because that is the actual reporting done by the accounting team. Next, accounting records, general ledger, accounts payable, account receivable. So if they have any certain doubts or queries, then they can get into these ledgers and see what are the concerns they have, right? And the last is other financial data like sales data, customer data, market research data, right? So this all will help them to collect all the financial data what they require for their data analysis. Next, financial analysis. Now you have the data. Now next step is to start doing the analysis of the data what you received. The next step is analyzing the financial data to identify trends, opportunities, and challenges. Right. So if something is going beyond your budget, it's a challenge. So you need to see how to control. If you see that you are able to save good amount of money compared to the budget, then you should see what are the other opportunity where the money can be spent so that the company can earn better profit. Right. Now, financial statement analysis. Analyzing financial statement to identify trends and patterns. So when I say trends and patterns means you have a budget, like for example, you have a trend of growth of sales of 5%. Your financial statement will give you the actual result that whether it is going at 5%, 3% or more than 5%, right? So you will see the trend and pattern as well. Ratio analysis, this is one of the important tool for all APA team. Ratio analysis helps by giving you the instant, you can say health of the company. How is the health of the company? You can come to know by doing the ratio analysis. So calculating and interpreting financial ratios to evaluate performance. Ratios like current ratio, right? In case of current ratio, it should be more than one. That means your current assets should be more than current liabilities. That is how you can see that your working capital management is good, right? Debt equity ratio. Similarly, liquid ratio. So there are different ratios which the FA team need to perform and see that is there any ratio which is alarming and you should go and talk to the management saying that this is the area where we need to improve, right? Then variance analysis, identifying and explaining difference between actual and budgeted financial results, correct? So you have a budget, for example, X amount. Now the amount reported in financial statement is Y. As APA team member, you need to get into the details and find out what is the reason behind this difference. It's not that okay, you have a difference and then you report to management saying that it is this time we have reported as lesser number and there is a difference. You are responsible to identify the cost drivers or the reasons behind the difference, right? After you do financial analysis, then the next step is financial planning. Now you are getting the details, right? You have actual data, you did the analysis. Now the third step is to plan properly so that in future your budget and actuals are not having a major difference. Then you do budgeting. What is budgeting? Creating a detailed financial plan for a specific period. Budgeting always come with like 3 months, 6 months, 1 year, or 2 years maximum, right? Budget can't be for a longer period because by seeing the current situation, you are preparing the budget, correct? Now, when you do this budget, many companies what they follow quarterly budgets, okay, or you can say half yearly budgets. And when they do this budget, they take into consideration all the actual impacts. And then when they again do the second half or second quarter or third quarter, they implement the other cost drivers which are impacting the actuals. Okay, so by year end, when you have the complete picture, you should not have a very different, high difference between the actual and budgets. Okay, so when you're doing a budget, there will be a short-term budget, there will be long-term budget. The short-term budget has to be closely monitored. At the same time, you have to see that your long-term budgets matches with the total of all the short-term periods, right? That is how you learn. And then if there is any unusual changes in the budget, then definitely that has to be recorded as this. There is a unusual business event, right? Like for example, when COVID came, nobody budgeted that COVID will impact their business, right? But they budgeted that their sales will go up. But when COVID impacted the business, then they have to again redraw or you can say re-prepare the budget in a requirement of the current situation, correct? Next one is forecasting. So when we talk about budget and forecasting, the difference is that forecasting is for a longer period. Okay. So predicting future financial performance based on historical data and market trends. Right. For example, in India, there is less demand of auto currently. So if you feel that okay, the auto sector can grow because the EV market is going to do better in future and you are manufacturing EV vehicles, with that trend, you can increase your forecast. Okay. So forecast always depend on the market trend. How is the demand of your product is increasing day by day? So all factors you have to consider and based on that you do a forecasting. Okay. Forecasting also helps in preparing your impairment testing for assets as well. When your accounting team will prepare the impairment testing, they'll ask the FA team to share the forecasting so that the discounted cash flows should be more than the investment the company has done on the assets. Okay, so that is a very important check, and forecasting is very important because that gives the management a clear path how they have to take decision to achieve the forecast. Then is financial modeling. This I talked about, like examples of buy or make, or you should invest, or you should get it on lease. So creating financial models to simulate different scenarios and predict outcomes. So this is also very important for the management team, that we have different financial models. Sometimes we have one different nature of sales as well, right? So you may have an income of X work, you may have an income of FOV, CIF. Sometimes it is risky for the company, so they again change the financial model, change the income terms. So this is one of the example what I gave. So finance has to get involved into different financial processes to see that the model is working correctly. If not, then the company has to take a decision, or the FA team has to take a decision to see that what better financial model can be implemented or financial process can be implemented, so that the risk for the company, whether from the profit point of view or from the compliance point of view, are well maintained. The last is performance management. Now you have defined what is the budget. Now the next job is to see that whether you're performing in according to the budget you have done or not. So performance management involves monitoring and evaluating a company's performance to ensure alignment with strategic goals, right? And what it includes, one is KPI, key performance indicator. Today you go to any company, you will have a set of KPIs. Okay. Yeah, obviously the KPI may not be everything related to finance, right? You may have a KPI to deliver certain things to customers. So it may not be directly related to finance, but as majority of the KPIs are linked to budgets, linked to spend, right? So establish and tracking KPI to measure performance. So FA team will ensure that whatever budget they've done, the company is spending that amount and not crossing the budget. And if it is crossing, then you have to have multiple reasons behind that, that why the budget is not utilized properly, or why it is crossing the budget. Then performance reporting. Okay, providing regular performance report to stakeholders. Now your management team or your auditors, they may ask the variances, why there is variances happening. So you have to prepare a detailed report about the variance, and you have to report to the management team, so they understand that what are the major reasons for the variance. I can give a very good example. When this Red Sea issue happened, and a lot of ships could not come through the regular route, so they used to divert and come to India. So in that case, what happened? The freight cost went up, and none of the business, they predicted that this such situation will happen, and the budget never captured such high freight cost. So what companies does now, they have to modify the budget, or if they could not modify the budget, the actual should be higher than the budget, then they have to mention the specific reason that because of Red Sea issue the freight cost has gone up. Then management will come to know that okay, these are the XYZ reason because of what the freight is going up, and they'll get opportunity to decide how to change the financial model or how to change the process, so that this cost can be minimized, right? So the main reasons for this variance has to be highlighted in the reports, so that the management can take the decision in the right time. Then performance analysis, analyzing performance data to identify area for improvement. Definitely there will be areas where the company may not focus every time, and those areas need to be improved. In that case, the FA team ensures that the such data goes to the management, and they explain the management that where the company is lacking, so that management can focus or ensure that those processes developed. Similarly, wherever cost inefficiencies are there, right, due to the performance analysis, you will find that certain areas the cost efficiency are not good. Those areas are also highlighted to the management team, so that they can take proper decision and minimize those cost inefficiencies. Now I am going to talk about the benefits of FA team. The question is how this team helps the management, how this team helps the company, okay, and whether there is a need of this APA team. So let's see what are the benefits we get from APA team. The first is improved decision making. So I explained in the previous slides how they take decisions, how from the financial point of view. So FPA provides business with the financial insights they need to make informed decisions, right? This includes identifying areas for improvement. So FPA helps business identifying areas for improvement and optimize financial performance. Next is evaluating opportunities. FPA helps business evaluate opportunities and make informed decisions. Third is managing risk. APA helps business manage risk and minimize financial losses. So all I explained in the previous slides, so I'll not repeat it here. So you can understand that they always guide the management team from the finance point of view, which is working good, which is not working good, where we can reduce the cost, which are the process we need to eliminate because it is taking time to process the uh, main process, or you can say the processes which are delaying the deliveries to the customers. They can look into all that. Next one is increased efficiency. So FA helps business streamline their financial processes and reduce cost. This includes automating financial processes. APA tools and software can automate financial processes and reduce manual errors. Improving financial reporting. FA provides business with accurate and timely financial reports and reducing cost. APA helps business identifying areas for cost reduction and optimize financial performance. So they always look into each and every process to see where they can reduce costs, and it helps the benefit the company. And the last one is better performance management. I explained to you that they ensure that everything is measured properly and it is in accordance to the budget. So FA enables businesses to monitor and evaluate their performance, making it easier to identify areas for improvement. And this includes establishing KPI. API helps business establish and track KPIs to perform measure performance. Performance reporting. FA provides business with regular performance reports. And last is performance analysis. APA helps business in analyzing results. So you can see it's a very important area for the management, and all CFOs they focus on FA more so that the end result or the focus of the business or the budget what is done by the business are properly spent or are properly ensure met, because end of the day if you cross the budget then the company will go to the there are many companies who become bankrupt, or there are many companies who could not perform well because of wrong management of the working capital, wrong management of the financials what they have, right? So it is a very important area for the CFOs. And if you are planning to join a FA team, you should go with a lot of technical knowledge on the financials. You should know a lot of things about the numbers, ratio analysis, and all that. Okay. So that's it from my side. If you like this video, share with your friends. And if you have not subscribed to this channel, request you to subscribe to the channel. See you in the next video. Thank you.